Verde Bio Holdings is a mineral acquisition management company with acquisition experience in several different parts of the U.S. And with me is the CEO, Scott Cox, to talk about this very unique business model. So just start with what the company is all about.
Well, first off, thank you for having me. So Verde Bio is first and foremost an oil and gas company, but we've got a unique business plan where we acquire minerals and the associated royalties under producing wells across the various basins of the United States. And our goal is to build a really nice balanced portfolio of natural gas and oil at good prices.
Mm-hmm. And this is a very unique business model. I didn't even know this business existed, that you could buy the minerals. So another oil company, a driller,
yes,
or explorer, or whatever, takes over that land, and then you come in and...
Yeah, what we like to think of it as is shared reserves, but not expenses. So when they come in and drill on our minerals, we have no cost associated with that well. We simply get the mailbox money later on after it's producing.
Yeah. So there are some other companies in this space. I'm not super aware with them. Tell me about the competitors who's in this.
So typically, we don't have a lot of competition where we are right now. There are much larger companies that do what we do. However, we are unique in that we kind of have a grassroots efforts when it comes to acquiring these things. We like to acquire, if we can, straight from the landowner. And therefore, when we compare it against the much larger companies, they have a large investment thesis where they can't look at things, you know, below a certain amount per month. Well, we think of ourselves as an aggregator where we'll basically look at anything as far as size goes, and if it will help the portfolio and it adds value, we don't really care what size it is. Mm-hmm. And so we're not, the key differentiator there is that we're not controlled by a strict investment thesis.
Okay, and of course, I'm sure you're well aware, energy, fossil fuels has been, I think, maybe the only sector of the economy that's done well this year.
Yes.
I mean, explain, like, you're in the industry, what do you see, you have benefited from that, I assume?
Yes, so because of what we own, we actually get the benefit of the rise in commodity prices without any additional expense to the company. So if we were, you know, our checks that we receive have gone up proportionately with the markets. I do believe that I don't think it's sustainable at these prices. I think they'll come down, but ultimately, yes, we like the rise in the prices. It's not good for the overall economy, but it's good for us as a company. And it does stimulate growth and development in our properties. Right now, we've got, you know, we've received notice of over 18 new wells being drilled, and another 15 being brought online soon. And so, you know, we do value the rise in it, and it's ultimately kind of what we hope for in the cycles of our investments.
Yeah. So that's really interesting because people are drilling more because of the prices. There's an incentive now to do that.
There is.
Does that help with acquisitions?
It makes it a little tougher on acquisitions.
Oh, really?
So because the prices are higher, the demand gets more for these types of deals. And so we've got to be a little more picky, a little more careful in what we buy. We might not take a lot of deals that we normally would in a low-priced environment because, you know, when we look at things at these types of prices, we're buying at basically the top. So we've got to make sure that you've got a good active operator, well-funded operator, and that there's essentially some growth and development to continue on it. Otherwise, you're buying a dying price.
Interesting. So talk to me about the acquisitions you have made and future acquisitions that you're looking at.
So to date, we've made, I believe, 18 different acquisitions across 7 states in all of the major basins. Okay. We've got stuff in the Marcellus and the Utica, the Haynesville Shale, the DJ Basin of Colorado, the Permian Basin of Texas, and just kind of all over the place. And ultimately, we're, like I said before, our goal is to build a nice balanced portfolio of good producing assets, and we're going to continue to make those acquisitions. We're not finished. We're going to continue to grow the company and build a portfolio as opportunistically as we can. And we're going to manage that portfolio. And that's another differentiator with us, is that we don't have any prescribed hold times on these things. If we have an asset that's not doing well, we'll divest it and reinvest the money.
Okay, and also some of your effort is going into marketing, so which is what brought you here today.
Yes.
For New to the Street, and also investment relations. So talk about that part of the business.
Yes, so our goal is to really get the story out there. And like you said, a lot of people don't even know that this subsector exists in the oil and gas markets. And so we found it difficult to really get the story out to people and let them understand that they can be in oil and gas, but they don't have to be with an operator. They can have exposure to those markets without exposure to huge debts and things like that in these massive companies. And so, that's our key, is that we want to get the story out that we are an oil and gas company, but we're a very low risk oil and gas company, and ultimately build a good shareholder base and continue to grow the company.
And talk about your growth plan. Is there a chance for an uplisting?
Yes, we are exploring an uplisting. We believe that that's the way that we can truly unlock the value in the company and the stock. And I think it will continue just to open up more opportunities for the company.
Yeah, okay, Scott, thank you so much.
Thank you for having me.